of almost 0.4%. Good time actually to get in Jai Bala of Cash the Chaos joining in on the show. Jai, it's been a one-way up move that we've seen on the Nifty Bank from the middle of last week, barring a couple of days of pause for breath. Where do you see it go from here? In fact, as we speak, Nifty Bank gains have hit the 4-digit mark, 1,000 points on that index, 52,700.
Yeah, good to be here, Mangalam. The long-term resistance for the banking index comes at about 54,000 to 56,000. So I think that's the attempt that's being made. It's mainly driven by the private sector banks, in particular by HDFC Bank, although I like Axis Bank more than HDFC Bank. And but the upsides are probably getting capped because the resistance I'm talking about is a very long-term resistance starting from about 2010. So the banking sector is likely to face stiff resistance around 54,000 to 55,000 mark. So a little bit caution there, tempered bullishness here.
What are the other trades that you would recommend ex of these private sector banks?
Yeah, I have a general theme going on, that is a broad theme that's going on. For me, it's the green theme that Prashant spoke for just a few months ago. I have a couple of calls on renewables. One is the Borosil Renewables, solar energy company. The stock is looking like it's breaking out from a short-term consolidation. The stop loss comes at about 460, and it has potential to scale to fresh all-time highs somewhere close to 830 plus. So I have a price objective for about 840 for the stock. But it's traded very volatile, so we need to position sizes very carefully. And another one is Ultra Green Energy. The stock has potential to scale about 2,300 and a stop loss at about 1,660 for this whole green energy thing.
What about Amara Raja, now locked in an upper circuit of about 20%? Is there a kind of breakout that you see for Amara Raja?
Yeah, the stock is still bullish. It's still got unfinished upsides to work with. But if you want to look at something else in this, I don't think this is the stock you want to be at, because it's extremely overstretched and the risk rewards are very skewed. Probably if you were to put in incremental positions, the reward will be something like 1.5 for a risk of about 2. So that's not what you're looking at. So you can use the trailing stuff about 1575 for the stock and keep a hold on it.
On Nifty Bank now, Jai, have you sort of given us levels? You talked about individual names. So if we're about 52,660, 52,700. So here, what are the levels?
Yeah, the nearest resistance is 5,400, and the support comes at about something like 49,990. So it's the resistance. I think 5,400 is going to put a cap on this rally. When it comes to the Nifty itself, which we haven't spoken about, as I said last week, as long as the overall market stays about 23,300, the trajectory continues to be up. But I think the market is aiming for 24,095. It's 24,025. It's a big resistance for the Nifty. And the drive for the Nifty and the banking index is coming from the attempt of HDFC Bank to clock fresh all-time highs past the 14,400 mark. So, probably the sentiment is coming from HDFC, but probably more upsides to work with in other private sector banks like ICICI and Axis.
Any other sort of trends or... because, I mean, there's sort of what you're saying, PSUs for the PSE index, for example, have you sort of scanned through some of these sectors and how they're poised?
Yeah, the PSE sector is looking quite tired, and it needs a sharp pullback for it to rejuvenate. And the same goes for the other PSU banking index too. It's just mainly SBI. But when it comes to the other names, I have a backup on a tech stock, which is Black Box. It's an IT stock, and if the stock were to close above today's high, I think it has potential to scale all-time highs to about 425. So this is just a backup. I'm not so bullish on the IT names because IT has got limited upsides, in my opinion, somewhere close to about 36,500. So Black Box is just a backup, 211 stop, and objective of 425.
All right. Thank you so much, Jai, for joining in. We'll take your leave for now on